Overnight, we saw a number of manufacturing surveys get released around the world. Now, these surveys are really good at giving an indication of how economic activity is doing. The good news in China was their index went up slightly, and particularly driven by a lift in export orders. So that's an encouraging sign that the Chinese economy is holding up despite the slower European economy. Hopefully for us, it means that there's lots of hungry manufacturing workers who want to keep up the demand for the food exports that we send there. In Europe, we saw the index remaining flat and still implying a little bit of a contraction in activity there. In the US, their index unexpectedly fell back. It still shows a degree of expansion going on there, but does tend to suggest that the economy there is coming off the ball after a pretty strong finish to last year. Now, markets had a pretty good run last night. Equity markets, particularly in Europe, were up about 1%. What we saw with our currency was the New Zealand dollars nudged up to about 84 cents against the US dollar and pushed up to about 63 cents against the euro. Yesterday, the terms of trade were released for the December quarter. Now, the terms of trade are really just the purchasing power of our exports. So in other words, what can one container load of dairy buy us in terms of TVs or cars that we import? What we saw was our terms of trade were down slightly. They're just down off a nearly 30-year high. So our purchasing power is very, very good. Now, what we did see was that dairy prices within the export story were a bit weaker, and that was showing through those weaker global prices that we saw last year. Now, we would expect that our export prices will be a little bit softer this year, and that's partly with the currency going back up and global prices down a little bit, but we're still likely to see them at a high level, and those terms of trade being a really good buffer for New Zealand. On the export volume figures, we saw some pretty encouraging news. Exports up about 3%, dairy up about 6% within that, and that's that good production. Meat down about 7%. That's also due to the weather, just those good growing conditions, meaning stock's been held off and will be exported a bit later on.